Welcome everyone. It's an honor again to be the FTTH conference. A lot of things, and clearly for our industry and ADL being quite active on the fiber topic since quite many years, supported many of the key transactions, still heavily involved in larger consolidation deals or review business cases. So it's a pleasure, and we are massively present. I hope you had time and opportunity to meet some of our colleagues throughout the 3 days here. Today we wanted to, again, to give the to organize a quick session where we give some of views on why consolidation and fragmentation is still a topic in the industry today. And not just because people expect it to come and there are good deals to be done, no, but fundamentally there are strategic rationales on why we expect certain moves and where will we see those and where we're not. Obviously, we'll have a panel discussion because you don't come just for the consultants, you come because you want to listen to peers of the industry as such, and a quick Q&A session afterwards where we open the questions to the public. In our panelists, I would like to welcome just after the presentation, they will come on scene. First, Uwe Nickel. Uwe has been heavily involved in deployment of some of the setup and deployment of some of the FTTH of fiber cores in Europe as such. Also advisor to some of the boards, a board member, and has his own construction company. Mark Straubinger, EQT. I'm not sure I need to present EQT anymore to most of the people in the room here, but clearly we'll be providing more, let's say, one side of the investment perspective. Robert Sunderman, it's more actually the lender perspective that comes here, which is also quite different because between the actual pure investors and lenders, there are different perspectives in terms of what is critical for an investment. We have seen that clearly also in the work we've done in the US on this topic. And then obviously we cannot just have, I would say, investors and board advisors and people in the construction. I would say we also wanted to have someone actually from one of the operators, so Rob Hamlin, Chief Strategy Officer of CityFibre, and I guess, again, most of the people here in the room will know about CityFibre as such. So I hope that you enjoy the panel discussion. There's room for Q&A, obviously. We expect your questions. We expect any further debate and follow-up discussion afterwards. In the meantime, I will hand the floor actually to two of my colleagues that have prepared the session. Nils Jacobin and Gabriel Moore, both working on, let's say, supporting fiber companies in their operational setup, transactions and such, but also in terms of the topic of consolidation in the last couple of years. So, Nils, please.
Thank you, Gregory. So, of course, we start with a few numbers. Of course, here we only see deals that are also tracked. So there is the number of deals, and we try to classify them by, are they more strategic, so coming from the financial or strategic investment side, and how many are consolidation deals. Even with this extract, which of course is missing a lot of the local acquisitions in Poland, Hungary, Spain, UK, etc. So it's missing a lot of the small bits and pieces, in particular in markets like Spain, but still it gives you an impression of how the trajectory of M&A deals has evolved. And clearly we see already a growth in deals, 24 a bit slower, but in particular also a shift towards more strategic investment and also shift more towards consolidation. And you see here also the markets where most of the tracked deals are coming from. So there is a development, but of course many, and also we were expecting consolidation to be potentially even faster, with more deals happening quicker across the European markets. So the number of deals is of course one reflection, but of course to consider now where we are at the moment, we have to see how advanced are we. So are all the networks done? In some markets they're more advanced, and we'll look at the dynamics and drivers, inhibitors of consolidation that are shaping the situation for operators and that also investors have to be aware of. And we're somewhere in the middle actually when we're looking at Europe. So a lot of money, 113 billion euros, has already been spent on fiber deployments across Europe. But to even get to 90-ish, 91% coverage, another 116 billion is still required and expected to be spent until 2030. And then the numbers, of course, to reach 93, 99 are even higher, because then you get into the even more expensive remaining bits and pieces. Now, where's this money coming from? Of course, it's coming from equity investors and also from lenders. And here, of course, the question of refinancing is one that's also relevant, considering how relevant consolidation and when companies will be on the table for consolidation is shaping up. And these are some examples or indications of things that are affecting and driving how also the markets are shaping up and what is actually affecting consolidation. And there are things like below expectation penetration, not meeting plans, higher capex, increasing risk of overbuild. So all of these things, many of you have heard about in various of the sessions. And of course, that's also what of course investors from all sides are of course worried about and need to see proof points and want to actually see companies avoid, reflect, and manage these risks. And now getting into the factors that are shaping and affecting consolidation, of course we have things that drive consolidation and impact both the speed and velocity of this happening. And then we of course have inhibitors. And on the drivers, of course, we have how viable is the business for players. So are there small players with low penetration rates, quite high cost base, both in terms of how much capex they have spent, but also how much opex they have running each month. And that's of course driving the viability. So if players are running into cash problems quickly, then that's increasing the pressure for consolidation. Then we have, of course, maturity of wholesale and partnership models, and that's pretty much, are already ISPs onboarded, are all of the players also using all of the networks, and is this supporting penetration in the networks and improving, let's say, the viability overall. Well, that's of course another factor that's improving the situation for operators, and they can remain independent even at smaller size, potentially. Then we have, of course, customer acquisition, growth pressure, and also the competitive landscape as such. So are there a lot of small players, very local utility players, players in smaller cities? So a lot of markets have these players, some already don't. So that's, of course, also driving the level of consolidation that you can expect in an individual market, and also driving then in particular the consolidation pressure for specific players. On the other side, you have inhibitors. So when rollouts are difficult, integration is complex. So how much complexity is there on the IT side in the, let's say, OSS, BSS systems versus the level of synergies that you can expect. Of course, you have to draw a line somewhere of what it means in the sense of how much time does it take and how unpredictable is what we're doing in such a consolidation. Then, of course, there are strategic and financial perspectives, so tactics that are affecting the, let's say, wait and see approach. So I can start now and be proactive and start consolidating early, or I can say people will be desperate, operators will simply run out of cash, and I wait. That's, of course, different perspectives, in particular when you're looking at how incumbents maybe potentially would behave versus what let's say, challengers would like to do and how they would like to drive the market. So all of these drivers basically lead us, of course, to a framework where we can say how different markets look in contrast. And Gabriel, maybe you want to take over here.
Sure, happy to do so. And what would be a consultancy presentation without 2x2 metrics? So therefore you can see here on the next slide how all of those factors are actually coming together. So if we group them into basically the financial viability as well as the market fragmentation, you can clearly see, okay, there are different buckets that are forming up. And from the elements and dimensions that Nate has already introduced to you, many of them are exactly forming those dimensions. So the financial viability, obviously it's a very important dimension, how good of a state a company is in order to see whether they are actually illiquid to driving consolidation and to be a front runner in this space. And it goes without saying that this is the same for the market itself. If I have a lot of players, there can be a lot more dynamic compared to if I have 2 players, for example, that make up the whole market by themselves and have the entire market share. Obviously, it also needs to be considered whether I'm talking from infrastructure perspective or from a retail perspective, because the different dimensions then have also various impacts. And what we have put together here is the result of the various projects that we are running within ADL, as well obviously as our market understanding, where approximately the countries are. Here I would like to put a very large disclaimer on this slide. Consolidation is obviously always something that is company specific. It's not necessarily something that is market specific, but it can be used as an indication where the state is. And then if I pick a few examples to just illustrate it, like for example, if you have a nationwide incumbent that is very strong, but you have, for example, limited open access play in the country, like for example in Germany, then there's a different positioning obviously of that market compared to another market, like for example Poland, where there's a higher degree of open access and also already consolidation taking place to a stronger degree, I would say. And there are a lot of countries, like for example Spain, that have gone through a phase of consolidation from 1,000 altnets, or more than actually, to at the moment some 300-ish, that also can see here and is reflected on the chart. And one of the dimensions was the financial viability of the companies, and what is strongly related to this is obviously also the operational excellence. So what you need to make sure is that when you consolidate, how can you leverage the synergies from one company to the next one, in which state they are, and there are various challenges that the companies are going through when it comes, for example, deployment, the collaboration with the third parties, the automation of the entire process, that impact, and also how smooth consolidation go and how attracted players are to consolidation, because as long as you struggle with yourself, you're also obviously reluctant to take on others and drive consolidation. Therefore, very important to also look into this. It goes without saying that if you are going into that direction and are driving consolidation mergers, there are multiple elements that you need to consider. So you need to, very importantly, form an integration strategy that you have and that you push. You need to make sure that you have respective priorities within your organization that actually steer how the integration is done, how the PMI is structured. And with that, there's, for example, the technical element where you can say, okay, Nate's mentioned BSS. What is my strategy? Do I want to have one BSS stack versus multiple stacks? That obviously impacts how I can bundle products, how I can interact with the customers from a sales perspective as well as service perspective. Giving an indication, having a clear guideline and framework around this will ultimately help you in the consolidation and will be very relevant for the PMI itself. And with that said, handing over back to Nate.
Thanks, Gabriel. So basically, consolidation is happening across Europe, but slower than we expected. And of course, still a lot to be expected at different speeds in different markets. Yeah, some already more advanced, others preparing, waiting to see what happens. Yeah, so quite interesting picture, quite interesting to look at the different markets and see what's driving it in different directions. And yeah, of course, we'll be hearing also in the panel the different perspectives, in particular how that's perceived and what also then lenders, investors, and also operators are thinking about how they're dealing with it and how they're reflecting it. And the value chain we've all seen many times. Of course, it's both an enabler, yeah? So if I'm running smoothly and very effective, then it's easier for me to start consolidating. On the other hand, it can be a better defense if I'm successful and performing well across my operational levels. So of course now, starting to go into the panel direction, of course, yeah, what can players do? What are the expectations? And also, again, what are the drivers, inhibitors, and how can the different parties and stakeholders affect these? And with that, I'm happy to welcome our panelists to the stage. Good. Maybe following up from the dynamics perspective that we've seen, of course, first question goes to Rob, with CityFibre recently, very recently announcing the most recent acquisition. Maybe you can comment a bit on that one and how that illustrates what we just saw.
Yeah, thanks very much. So CityFibre, just to recap from people that don't know us, we're the largest independent fibre operator in the UK. The UK has traditionally had a sort of kind of weak duopoly in terms of fixed access infrastructure, a regulated incumbent in BT Openreach, and a cable network that covers about half the country in VMO2. So as CityFibre, we're aiming to provide a large-scale, independent wholesale platform. And we think the UK market is actually very, very conducive to a successful large-scale wholesale business. About 50% of the retail market are independent ISPs, so they don't own their own retail. They don't own their own infrastructure. Sky, Vodafone, TalkTalk, the largest participants in that, and a number of fastly growing ISPs. So there was some debate on the investor panel yesterday, actually suggesting that the wholesale opportunity in the UK was sort of weaker than, say, in Spain. And I certainly don't see that. I think it's just at an earlier stage in evolution. Actually 50% of the market and growing, being independent operators without their own infrastructure, naturally incented not to give their network expenditure to their competitors who compete with them at a retail level. We think, and we are seeing, the UK market being very, very conducive to that. So we've set out an ambition to cover at least 30% of the UK. We actually think there's a good opportunity to cover about 50% of the UK. And consolidation is a key topic. So, we thought we would just time out an acquisition for 2 days before this event as a favour to ADL. So I hope we get credit for that, some free services. But the UK market's in a great spot for consolidation, we believe, and pick up on some of the topics that you raised there, because the incumbent, BT, has done a really great job of rolling out fibre. You'll see the charts from the FTTH Council. UK has been one of the fastest growing coverage countries in Europe. But really, the incumbent only started their rollout when challengers like CityFibre started building before them and started indicating that they were going to have successful large-scale businesses, well capitalized and supported by large investors. So the opportunity we see, whilst the incumbent has built a lot of fibre infrastructure, they're at around 17 million coverage in the UK out of a sort of 30 million market. If you take CityFibre and all the alternative players, there is already built infrastructure over about 16 million. Virtually the same size platform, but it is just in a whole host of different ownership structures. Largely doesn't overlap at all. So we think, consolidation in the UK is, I would argue it is one of the most conducive. I saw it was on the line between your kind of high potential and medium high.
Yeah, to
but
enable
very
the
conducive.
ISP retail pickup actually.
Yeah, and we can talk more about it, but I think the fact that the market has a very strong wholesale potential is a big driver, because that provides a big revenue synergy, and the fact that we have very supportive regulatory environment, where Ofcom kindly published their consultation on the next 5-year cycle the week before this event as well. And the fact that there is large-scale infrastructure built. So to our recent transaction, and we did another one last year very similarly, if you take those two together, they provide about 500,000 a footprint, 500,000 together. They were both done through share-based considerations. So I'm sure we'll talk about the financial markets, but they didn't put further pressure on lenders. They didn't require further cash. They actually de-lever the business, because it is basically further equity support for the company, but not in cash terms, when we have some liquidity challenges in the market at the moment. And they drive all the cost synergies and revenue synergies.
Of course, what next for you is, of course, the integration, and there maybe we have some tips also from the panel.
Yeah, we'll come to that. But I would move the UK down as to
but I mean, for you as City Fibers, of course, with the last acquisition and this acquisition, of course, the question comes, how are you tackling the integration? How are you putting it next to your, let's say, ongoing existing core business? And that's, I mean, maybe Uwe, you can comment briefly from your experience from many years with operators and also integration topics.
Yeah, I mean, it really depends market by market. And you really have to go into the details of it. And everyone who run an operator carrier and had to integrate, I remember in Nexio integration, I mean, what kind of homogeneous network architecture do you have? I mean, OSS, BSS, and I remember even when I was in level 3, I think we had 36 different IT systems, and the head of IT always said, I need 150 million a year to keep the lights on. And I mean, when you are a greenfield, I mean, this is much easier. There's a lot of things, OSS, BSS, you can put together IT systems, and really it's about really understanding the platform mechanism on that. And then usually operators, then they bring in a lot of consultants. I mean, you make a lot of money with this, Accenture, etc. But then who's actually implementing that takes time, and it slows down the efficiency of the organization. But you need to have a dedicated team on that. But I think everyone who run a carrier knows how difficult it is, and it's not that easy. But with regards to, I think when I think about everybody's talking about consolidation, but what do you consolidate? And it really varies country by country.
Yeah, and it's also hard to put it, let's say, without affecting the running ongoing business, because you need to integrate it into the main operation, so it's affecting it. It's just simply not feasible to put it outside of it. Maybe a brief question to Mark in that context. Are stakeholders, and of course in particular investors, underestimating the integration challenges, or is that something which everyone's aware of and already including in their expectations on timelines and cost, etc.?
That's a wider question maybe than you've intended now, because I think with Uwe you've mostly discussed technical integration, but I think there's also a question of, does consolidation commercially make sense now? And I mean, we have the leading platform, I think is fair to say, in the German market, which you in your metrics showed as the market most poised for consolidation. In reality, we've not seen that much consolidation yet. I think we've seen one small, medium-sized move, I would say. And I think there's good reason for it, because many of the platforms that are standalone failing, and I would agree there's enough platforms that have the potential to fail, so it's a good market in that sense for consolidation, because many platforms have mushroomed basically without a proper functioning business model. The problem is there's good reasons why they failed. They've done something wrong, to be honest, and often that has to do with a model that does not really have commercial traction and that does not have a clear path to monetization. And then the question is, as consolidator, how quickly can you fix that? Because otherwise you have an empty network sitting around, and having an empty network is a sitting duck for overbuild. So I think you need to be in a position as consolidator through immense wholesale power, through own retail power, but mostly in my view through the ability to monetize, to very quickly transform that sitting duck into a network that has the same quality and same protection than your own. And I think that needs a bit of market maturity. And for example, Deutsche Glasfaser is now coming to that maturity where it has the wholesale power and so on to deliver it. But it takes time, I would say. And I don't think in every market the prerequisites for that consolidation are met commercially. And then the other problem is that many markets are so fragmented that, frankly speaking, the one-off cost of a consolidation are just not commercial, right? And I think to indeed warrant kind of all the effort of OSS, BSS, active equipment, but also cultural integration and so on, you need a certain critical size. And I mean, again, German market is a market I know well. But if I look at the size of the players I could consolidate today, we often talk about 1 or 2 weeks of production for Deutsche Glasfaser. For 1 or 2 weeks of production organically, I will not go through the effort of a consolidation. So I think consolidation might happen in steps, and consolidation might also focus on players that have at least reached a certain minimum subscale.
Yeah. I mean, there can then, of course, be intermediate smaller players that start doing the ones that are not feasible for a sizable player, and then it can be several waves along the chain. Very interesting. So maybe before we go to Robert, another question to Rob. So we have the failing problem players that have issues, and then we have maybe also good, well-running networks that would also be open to consolidate. Which one would you prefer?
Look, I think we'd actually prefer healthy businesses that are running well, and that's common for actually many of the operators. I certainly was on panels 3 years ago, 2 years ago, around the time of the mini budget in the UK, and there was a lot of speculation that a lot of altnets were going to hit administration. How many altnets in the UK have actually hit administration? 1, 2, maybe 2, because there are smart equity sponsors who are retaining optionality over what they do. So, but certainly in our experience, we've done 9 acquisitions in the history of City Fibre, every single one integrated, and our experience is that it's better a well-run business that's is actually better to integrate, because we want a high-quality network. We can only sell a high-quality network to our ISPs. When you are the kind of custodian of brands like Sky and Vodafone, you need to be able to deliver a high-quality network. So that's what we do through integration. And I'd just pick up, certainly our experience. I mean, I think it is a really good debate around when you have a build engine going and you're rolling out and you're kind of in control. That can be attractive. But certainly in our experience of these 2 transactions we've done recently, Connexin that we announced on Monday, we did Lit Fiber last year. The effort and complexity that went into the integration was far lower. Go try building 500,000 homes is not easy. There's a number of people here who've probably done it. It's not straightforward. But I think you have to be very intentional and decide on. There's very many different types of consolidation. I've done in my career large, kind of similar scale businesses. That is a more selective integration, and you'll be examining, management teams. You'll be examining systems. You'll be examining processes and trying to select the best of both. I think in the UK, what we're seeing is something that's very different, which is kind of more programmatic M&A, whereas if you are looking to, say, consolidate 50% of the market, you can do it through less transactions, larger transactions, but you're still going to be doing multiple transactions. So we spent quite a while examining that, speaking to people like ADL about the difference between programmatic consolidation and more selective consolidation. And therefore, certainly, we've had 9 transactions, 8 integrated. The one on Monday is not yet integrated, but is underway. And every single one's been successful. But I think the key to our success has been very clear at the outset. We have a playbook now that we know exactly what we're going to follow in integration.
Yeah, so you've created a replicable model.
We end up with one set of systems, one set of products, one set of processes, one set of SLAs, and you know, my advice would be, be intentional from the outset.
Uwe, you wanted to comment?
No, I think consolidation can be a business model. I mean, if you think about large consolidator, for instance, in the US, Zayo, for instance, is a good example, which is also an EQT portfolio company. They did 70, 80 acquisitions. It's part of their DNA, but you need to have a playbook. And I think you learned probably the hard way in your first integration. I think it's easier, that's what you said, in the second integration, and you really need to be set up for that. But as I said, if your underlying business model is struggling, it doesn't make sense to basically buy someone who's also struggling. And I think, I mean, when I'm here in the first FTTH Council 10 years ago or so, there was like a lot less people. Then there was in the heydays 5 years ago, there was all full of bankers, consultants, and all these people. And what happens then is, okay, the currency 5 years ago was HP. Everybody was driving HP. HP was the currency. And HP actually doesn't pay your bills. And then the whole industry has shifted in the last 2 years, 3 years, to HC and HP. And what the interesting part of it is, I think there was 100 billions already invested. I'm telling you, to get to a level of HC, because, I mean, this is half, not even half the money is invested. If you're talking about in an urban area, it costs you 350 to 550 to connect a customer, depending on different things. In Italy, cheaper. Here, Germany, rural areas, more expensive. It can go up to 1,000. When you think about what is the role of the incumbent, I mean, in certain areas where Deutsche Telekom is rolling out, they have a penetration rate of 12%. I mean, someone needs to connect the rest of it, and that costs billions if you want to do a copper shutdown. And I think the industry has the tendency to always jump on a thing, okay, copper shutdown. You can't shut down copper in Germany. This is more than 150 billion need to be invested, otherwise you wait, what, a year before you basically can convert the DSL line to an FTTH line?
Absolutely.
And I mean, I think, and everything goes in waves. And I mean, 5 years ago, as an investment manager, you got fired if you don't invest in fiber. Now everybody's saying, ooh, fiber, ooh, oh, very difficult. I think there's a lot of the banks get nervous, everybody gets nervous, but I think from an European perspective, I'm more bullish than I was 5 years ago. Because I think rationality comes to play, and you need to have the penetration. And that means also there's a differentiation, and there's a lot of people who believe in horizontal integration, like you have a NetCo and a ServCo, and you saw KKR is making the bet on Telecom Italia, where they say the whole network is a separate asset class, where the ISP is just the ISP. In Germany, it's a different model. It's a vertical integrated model, but you could see we already have an ISP. I mean, Dommermuth and 1&1 is an ISP. It doesn't really own the network on an FTTH. So you also have to have interesting or compelling wholesale offers. And I mean, there's a difference in the Netherlands is open dark fiber versus in Germany it's mainly BSR. And then if your ambitious level is, I want, I don't know, 35 euros for a BSR line, okay, then you squeeze the margin for an ISP. So it needs to be like a deliberate decision to say how much I'm reducing my expectations on midterm EBITDA, but I'm securing the penetration. And one thing, and this is why I'm more bullish, when you look at the large players, and you can look at different countries, the speed of build-out has dramatically slowed down. Deutsche Telekom wanted to build out 3.1 million last year. They actually did 2.5. But they paid the capex of 3.1. And I think you see a huge increase. We built with Open Dutch Fiber here 1.5 million lines. on HP in 3.5 years. An incumbent who wants to overbuild is already paying 25% more. And by the way, just to be clear here, I'm very familiar with the construction businesses, the pricing will go up. There's a tendency in a short run for this year, maybe next year, where you have a little bit of price decrease, but there is a consolidation in the supply market. The supply for construction will go down because you need other people. You don't need to speak German to basically dig up the road, but when someone is basically connecting the HC and you let them into your living room, you better speak German. So the price goes up, and that's the reality. And everybody is now saying HP is not the currency at the moment, it's HC, and some will even argue the HA. And that's what you see, and you need to calm down a little bit and say some businesses need to hit the wall. And I was involved in Germany in some shutdowns where I said, there's no way that you can ever make money on this. And they need to go away. And I think telecoms is about scale. I mean, it's a difference if you buy 10,000 routers or 100,000 routers. That's just the way it is. And I mean, it was a difficult birth of Deutsche Glasfaser, but Deutsche Glasfaser has transformed now. And there are players, and there's only in Germany, I would say, 1 and 2 altnets who are actually will long-term survive because you are too big to fail. I mean, I don't know the numbers, but when you have plus 200 million or 300 million on EBITDA, I mean, you have a chance to pay back, at least pay your interest. And I think the capital market will change as well, because Europe, particularly what's happening in the US, what's happening in Russia, what's happening everywhere, there's a huge amount of money going into this market, and we come out, but you need to have a certain scale. You need to be at a certain size, otherwise it will be very difficult to survive, is my opinion.
Yep, absolutely, very good. So telecoms need scale, and that of course leads to the question, or maybe it's not even a question, are fiber mergers creating value, and what is the relationship between consolidation and value? And maybe Robert, you want to comment there.
Yeah, thank you. Again, creating value, we want our money back. So if we give a loan, we want to make sure that within the time period set for it is repaid, which is not the case with glass fiber, because clearly that has a very long horizon. So most of the fiber loans are between 5 to 7 years, or it's refinanced in a proper way. And I think for us mergers, and we have seen, and we had discussions with the C-suite about, hey, we have this great opportunity, we are in the process of building out, but we have this great opportunity to acquire a Stadwerke, for example. And then my recommendation is always first get your house in order, build your machine, and make sure that you have the, and I think Deutsche Glasfaser has done a great job in it, but it also took them time to build a machine. And even with their experience from Regefiber, and we have been supporting Deutsche Glasfaser from the outset. So we were there more than 10 years ago when Jordi and team, and I think we know them, came to Germany, but also they, with all the experience they had, took a long time to build the machine that they ultimately got. And for us to make sure that we provide financing on the basis of a business plan. And I think with hindsight, we all have seen that all the business plans we have seen were way too optimistic. The money, and I think that was absolute what you said, we have seen the CapEx spent and the loan drawn, but the amount of homes that were ultimately built were significantly lower than the business plan said. And that, I think, was a critical problem. Now, are they creating value if they merge? I think yes, they can, but we need to make sure that the synergies that are promised to us as a bank, because normally we get a new business plan, are delivered upon, which is not always easy. Yes, we know, of course, that this is about skill. So yes, if you have a very small rural player and you have 100,000 homes, you will never be really profitable because it's all about skill. And I think that I think is important for us, and we were recently involved also in the UK market, which is made a smaller scale. We were the debt advisor to the Zoom full fiber merger. Now, yeah, that was a great example where for us the merger created value. Zoom was a levered entity where we provided debt with a number of banks. Full fiber was an unlevered entity. And yeah, as a banker, nothing is more beautiful than an unlevered entity coming together with a levered entity, and the same amount of debt is covered by twice the amount of homes connected. So in that respect, yes. I think, what else wrote I down? Synergies we talked about. The integration risk, and I think that is something, and I've been in telecoms long enough to see the cable mergers of the years 2000, and Uwe and I go back when Uwe was still CEO of Pepcom. I think Tele Columbus is still integrating Pepcom and Primacom and a few other mergers.
Indeed.
All about timing.
Timing to leave, Uwe, exactly. No, but I think it sounds for us always easy, hey, please make sure that you do the integration. I think the gentlemen here are doing the real hard work. But for us, it's about making sure that if a merger is happening, that A, the synergies are realized, that the management team gets or continue to be focused on doing their job properly. So nothing is more destructive than a management team that gets distracted and sort of goes down the rabbit hole of trying to integrate something which doesn't work in the end. So that's a little bit from the perspective of a banker. I think creating value goes all in the pockets of ultimately the equity investor. For us, it's about making sure that we get our money back.
Yeah, reducing the risk and ensuring it's returned. Yeah.
Yes, maybe that's a long answer to a short question.
No, thank you. And is there an end point of the consolidation journey in your view?
Yeah, I think that's very difficult. And I think over the past days we have also discussed what will happen in the UK market. Will it be a too large player market? Yeah, I think it's much more complicated than that. I think mergers have always their own dynamics. We have shareholders who have their own agendas. We have shareholders who run out of money, shareholders who have to merge. And I think that's a little bit many of the mergers. And I think CityFibre is doing a good job in sort of rolling those players up. And it might be a coincidence, but around the FTTH conference last year, also 2 days before that one, the last merger was announced. So I think there might be a strategy with CityFibre on that one, but let me not comment on that one. But yeah, I think there's so many different dynamics. Each market has a different, and I think you have done a great job in showing a little bit what you need for certain dynamics to happen. Yeah. But yeah, I don't think there's a real end game which we can foresee.
Again, it can also be different in different markets. Yeah.
Yes. Yeah. I mean, the only thing I can say is that and we've seen that if we go back long time, the incumbents have a very important role to play. And I think in Germany, with a reinforced incumbent who was dragging their feet, and we were, I think many of us were in the session with the regulator and Deutsche Telekom. Yeah, that doesn't give me a lot of hope that there will be a lot of, let's say, consolidation in the German market induced by Deutsche Telekom. I think our hope is more on players like Deutsche Glasfaser. And even there, I think if you have a running machine, why to do mergers?
Yeah, yeah. I mean, an approach of the incumbents can also, of course, relate to keeping certain things the way they are, also to prevent, again, regulation. But maybe moving into the deal year 25, and there maybe, Mark, what are your expectations for this year across Germany, but also across Europe? Faster, slower, different?
Look, it's tough because so many super interesting topics were opened, and I would love to answer them, but I can move to the 2025.
You can also answer on that one.
No, that's okay. That's okay. I think reality is we are in very different times than where we used to be 3 to 6 years ago in the heydays of fiber, right? And what we see is the fundraising environment for sponsors themselves is very different. No, I mean capital is not the same commodity as it used to be. There's much more capital scarcity. There's also much more concentration on very proven sponsors, which helps it. It helps us also in the sponsor universe to consolidate, which, as in fiber, is, I think, a very healthy environment. You need consolidation on quality, but still the net effect is there is a bit more scarcity of capital, and there is competition for that capital. I think 5 years ago, basically people had to not duck away to get capital. Today, you really need a very strong pitch. And if I look in the digital infra world, I mean, we see immense capital deployment in data centers, and we can debate if data centers is its own gold rush, and maybe gold rush can end well or can end badly. And I think also for data center investment, I think probably more clouds will eventually be on the sky, I fear. But the reality is that some of these investments seem very nicely yielding, right? And I think fiber on business plan was very nicely yielding. And as I think many of our panelists said, much was underwritten on the basis of business plans and with little experience. I think the reality showed that it took longer to materialize kind of the monetization, and that also means that yield is going down. And I think fiber is in a tough spot where very few, very scaled players, and I think that the topic of scale is the essential topic in telco, on the wholesale front, on the build front, because you need to really keep inflation down and so on. Only scale allows you to deliver the unit economics that you need to actually succeed in this competition for capital. And that will mean that I think a lot of the tail end of many of these very fragmented markets, that will dry up. And I think it will dry up probably quite suddenly. I think the consolidation opportunity might come quicker than we think. And I think the scrutiny is then on the leading players and the players that have scale to really demonstrate that they can use that scale to get a return on capital, to get a yield that is competitive and allows them really to be an attractive opportunity. And I think that will mean that a lot of the consolidation will have to happen at very low prices, is one of the topics. And I think one topic is indeed this question of yield, and I think you need to be competitive from a kind of capital raising perspective. The other topic is liability, as we discussed, because networks that sit at 10-15% penetration, they've not done their homework. I mean, there is a lot more work to be done, and that, of course, depresses yield, and that has to be priced in. So I think consolidation will take some pain. I think that is the reality. But I think it will allow the players that have scale to even, because partially it will happen below build cost, to be honest, to have that yield basically that allows then also to access capital. But overall, I think, I mean, the blind boom in fiber is over. I think it's good that it's over. I think the platforms that can prove that through their scale and through good strategy, they can be a worthwhile investment. I think they will continue access to capital, but access to capital will be scarce, and it will really divide the leaders from the ones who will be consolidated, unfortunately.
Yeah,
Hope that was not too depressing.
Yeah, let's add to that, Robert. So, of course, the lender perspective. Do you agree? Do you have a perspective? Is the environment from the lender still similar, cautious as last year, improving, not improving?
Yeah, honestly, I don't think we have seen the worst of it. I think so far, if I look back over the past years, I think there have been two, let's say, mergers, acquisitions, sale processes where bank debt was involved. I think last year, I think, or the year before, I think it was Truly where the banks came out whole. Now, Valbon is actually at this point in time the owner. Let's see what they will do with it. I think in Germany we had Infrafiber, which I think we all know where that ended. I mean, that was a tight process. So far the banks got out mostly whole. Let's put it like this. But yeah, if there are processes where banks will have to take a haircut, yeah, that is of course sending shock waves to credit rooms across the banks. And I think where we have been over the past year is that all banks are taking stock of what they have done over the many years, and we had a few years where I think there was no fiber deal which was well oversubscribed, and I think we have been involved with Deutsche Glasfaser. We raised with them the first 5.7 billion facility, which was one of the, I think it was the largest deal at the time, and it was relatively easy because we got a lot of calls inbound, please can we be part of that deal, and everybody wanted to deploy significant amounts and we had to scale back. I think the last raising what we did with Deutsche Glasfaser was, what was it, a year, slightly over a year ago?
Yeah.
A year ago, where we raised 1.25. Yeah, that process was significantly more difficult, and I think then it becomes very important who are the winners and the losers in the industry. Yeah? And I think then having somebody like EQT, and I think they have a few more sponsors, but helps tremendously, and you need to have a good story. But from a debt perspective, I think, and that includes ourselves as well, we have taken stock of what we have, and I think the amount has been shared yesterday by Jeroen. So we have about 5 billion of lending exposure out in the market. Yeah, that's a very significant amount. And if we all think that fiber was a low risk, very steady business plan, yeah, I think we all have learned our lessons, both on the investor side, but also on the bank side. So going forward, and I think that has been also said yesterday during some of the panels, yes, there is still a bank market out there, but you have to have a really good story. You have to have a proven business plan, or at least have shown that you can deliver on your business plan, because nothing is more frustrating for a banker going 3 times to your credit or your risk management and saying, by the way, we just got an updated business plan and it looks again a little bit worse than it looked last time. And by the way, 12 months ago, we also had a business plan which they did not deliver on. So that is, I think, up to the companies to really start delivering on their plans. And then there will be availability of bank debt, but the market at this point is not very easy. And I think probably some people in this room will acknowledge that, having their processes in the market.
Yeah, Robert, Mark, you want to go?
No, just to react on that, and I think honestly the investor community, and that includes debt investors and equity investors, I think not the very experienced ones, so not ING and EQT, but in reality, the investor community has been at fault for what happened, right? Because in many markets, this extreme fragmentation was a result of players having gotten funding, but it was clear from the start that the business plans cannot work out because they could never reach scale in time, right? And then there is no viable business plan, unfortunately. So I think there was an unhealthy, I have to say, non-selection in who had access to funding, and I think it's per se a very healthy driver and accelerator of consolidation, that unselective kind of handing out of money has stopped. I think what, of course, the risk of the fiber market overall in Europe is now, again on the debt and equity side, is will the pendulum basically swing way too far from whatever side to the other side. Because of course there is still players that can really make money in this market, but of course indeed as shockwaves will go through credit rooms and they will go through investment committees. That is part of, if you fund players basically that should never have been funded, someone has to also lose money on both sides of the table. That is the reality. And I think what is very important is that leads, and I think it does, to a much better understanding of what is quality and what is bad quality, and then a differentiation, but also that the pendulum, of course, does not swing too extremely, which is always a risk in these.
The pendulum, the shockwave doesn't affect the well-running players too much.
Yeah, and maybe one remark, and I think that makes it, I mean, that is helpful for us, and that makes me also a little bit more optimistic. I think we, as somebody who has been in the industry for a very long time, had a hard time always talking about homes activated and clients and saying, hey guys, but ultimately our loan is not repaid by homes past. It's all about having clients. And I think that discussion that we used to have with investors, that sort of discrepancy, it's completely gone. I think investors, banks are all aligned, and that's what's giving me a positive stance towards the future. At least that alignment should help us to focus on what is needed. And that is ultimately generating cash, bringing down leverage. And if you bring down leverage, then I think the ability to refinance your debt is also increasing tremendously. And I think we have seen a French deal, which is sort of investment grade style. And then suddenly you can talk about private placements in the US. Then there's a whole new, let's say, plethora of financing solutions available. And that should be the game plan for all the large operators. Bring down leverage, unlock other pockets of liquidity.
Okay, then gets us, of course, to the question: what can operators do in terms of improving their credibility? So how can they prove that they will have a sustainable business? Is it simply the formula, meet your plan and that's it? Or what else can they do to prove the plan? And of course, that's something happy for everyone to comment, but maybe Mark, what do the companies have to show you that you believe they're on a good track?
Again, sorry, I'm not sure I can give a straight answer to that question, because it makes a huge difference if you acquire a platform or if you acquire as part of consolidation. And I think, again, it's a harsh reality if you do the latter, if you acquire for consolidation. In many markets, I think you will not acquire companies, but you will acquire assets, to be frank. And so I think you have to make sure that the quality of these assets that you acquire is of good quality, because otherwise, of course, you're acquiring a liability, not an asset. But I think it's a somewhat shortened due diligence process, I would say. And I think it makes it also easier to develop a playbook, because otherwise, at a certain extreme level of fragmentation, you cannot do a culture integration 20 times a year. That will not fly, unfortunately. So it has to be really an asset focus, I think. And in terms of platforms, I think the question really is the ability to monetize, which means penetration ultimately, and that reliable and quickly. It's the ability to deal with cost, right? Because cost increases have been a huge theme of the past years. So you really have to scale, but also the efficiency. Scale alone is not a guarantor for efficiency. To really be able to keep inflation in check and keep well below construction general inflation and so on. And then I think so those are the two short-term factors. I think then there is a long-term factor that is maybe a bit under-considered, I would say, in the European fiber world, which is the question of how certain can you be that your market position will keep for long? Because I think we have French concessions, we also have structurally overbuilt networks in Spain and in UK and so on, where I think there is a question what will happen at the renewal point, whether it's a concession renewal, whether it's an anchor tenancy renewal and so on. And will that induce kind of binary risks, or will it not induce binary risks? And I think today in the fiber world, my feeling is, because so many people have been burned on short-term risks, people tend to ignore a little bit the long-term risks. But I think you need to, as a prudent investor, I think you need to keep both in check. And that unfortunately means that there is not that many platforms of great quality in Europe. I think it's very select ones that do not have binary long-term risks and have their short-term house in order.
Yeah, and I think one of the risks we see, and I think that goes back to, let's say, the decisions which have been made in the past. Ultimately, a business plan shows a certain penetration, but to get a certain penetration, you sometimes need to do densification. And I think that for us is something that we focus more and more on, because, and it's a little bit what you said, it's about the capex that you still need to do to ultimately to connect the customer, and the capex that you will have to do, especially in Germany, that will become a problem, is the densification. Because if your densification means that you still have to do a significant amount of capex to actually get to the border of the house, then yeah, then that will be a problem which will emerge at one point in time.
Yeah, yeah.
And that's
Absolutely.
maybe something, yeah, that I'm happy to hear the view.
Yeah, yeah.
I mean, Deutsche Glasfaser already has an HC quota of 50%, so you
that
can
should
sleep well on
help.
that.
That
one,
should
like.
help.
Yeah.
Correct.
Yeah, I mean, maybe you want to start.
Yeah, I mean, look, it's really interesting to hear those perspectives, and I'm glad I'm hearing things which are conducive, really aligned to what we're trying to do, really, because you know, we do need to achieve scale. We've heard that. So City Fibre, we're at a point where we're sort of halfway through our rollout ambition. We're now EBITDA positive. We're starting to see operating leverage. We can increase the size of the business without adding very much to our operating costs at all. So we are at that point now. You could do that two ways, through greenfield build or brownfield consolidation. And the assets are now built in the UK. The capital has been invested. You know, the capital has been invested, and it's a matter of getting the cash flows on that. So, you know, if we look at a consolidation plan, you know, you move from a lot of greenfield capex, you know, which further funding would need to be found in the market, as your chart was showing, or you could move to achieving that same scale through consolidation, and then your two capex lines are really integration cost, which I would say is maybe 10% of build cost, like as a rough approximation, and then connection cost, and is entirely success-based cost, which I think is much more financeable, and is clearly is clearly an investment for sponsors and lenders to make, but is the investment that basically secures the investment that's already been made. So, you know, I think that is a pretty logical financial decision, obviously subject to liquidity to do that. So
it's also maybe slightly more affordable in the UK than, for example, in Germany.
Yeah, yeah, and relatively, you know, relatively efficient. You know, we're running at many operators now running at a sort of connection cost of £300, which is coming down in that region, and you know, very short payback on that within 18 months or a year or so on. So, you know, I think that is where why we've started to go down that path and looking to explore that brownfield model versus greenfield, because we think it is a win for equity sponsors. Definitely the optimal route to deleveraging and refinancing credit. There's absolutely no doubt about that. Those two transactions we've done, FTTH Council time, you know, both delever the business, come with no debt, share-based transactions, and add scale, add homes connected from the outset, whereas when you build, you've got no homes connected. When you buy, you're typically getting 10 to 20% already connected. So, you know, I think that's, you know, the discussion here makes me feel even more so that is the right path for the UK. You know, I think one of the challenges that, you know, we haven't discussed yet, but one of the challenges is for, you know, the investors in those businesses to come together. And there's always a dynamic of, you know, as an equity sponsor earlier in my career, I worked for the infrastructure funds at Macquarie, for example, and you know, you like to have control, you like to be adding value. If you do roll into a merger, you know, you need to sort of share that control. And I think, you know, that's one of the interesting things that we'll see through the course of this year, as to, you know, can management teams and investors see that vision of, and this isn't about City Fibre winning, this is about the industry. We together in the UK have built over 50% coverage in the UK. We've built that, and most of us are all adding customers at a very predictable rate. So last year we were within 1-2% of our budget on all metrics, and definitely on homes connected. Virtually bang on hit that number. So I think, you know, the opportunity is now to see, can we? I think most people would agree with the industrial logic, and I think equity and debt providers can see the financial benefit. So now, can we make it happen?
Yeah.
We certainly, it's in the press, we've got around, including the transaction that we announced on Monday, we've got 850,000 of coverage in the UK under kind of exclusive advanced discussions. So we're certainly hopeful of being able to announce more transactions in the coming months. But I think, it is whether we can see that route through to, scale, high levels of connections, and investors all sort of winning through, coming together. And that's not always easy, but that is one of the barriers we need to see that vision of consolidation is the way to secure the future. And then fiber absolutely still has all the fundamentals as to why there was the gold rush. There was a reason that so much investment came into the fiber market, because the fundamentals are still incredibly strong. We see just customers adding month on month, and there's many operators that do that. Yes, the gradient of that may not have been exactly per the business plans, but it's definitely coming. So I think there are definitely green pastures ahead, but I think they're much greener when we create vehicles of scale that will be successful for all participants, as opposed to sitting here in 3 years' time and we've still got a lot of small islands that are still not reaching the right credit metrics, the incumbents are able to leverage their scale and the alternative market hasn't. So, I think let's see if we can make it happen, because I think it's success for everybody. It's not people being consolidated. It's all the participants in the market coming together and deliver a win for everybody involved, and realizing that vision that we all saw. I was here 10 years ago as well, and many people didn't believe there would be customers looking for gigabit services.
Thanks, Rob.
No, I think there's a certain the debt market, there's the equity market, but there's also the regulation, and I think we have to give also some marks to some of the governments. I mean, when you look at all these guys, when you look at the guy from Portugal, I mean, they have overbuilt, but they have a 90% fiber quote, and actually they make money with 15 euros on basically for a gig, or 10 gigs or whatever he said, the Vodafone guy yesterday. And there is a framework needed. And when you look at France, they have a high quote because they had concession agreements. I mean, the most difficult areas is always, when you look at the fiber market, that's how we, from also the KKR guys, look at it. What is the ARPU? I mean, we are talking about everybody wants to protect the customer. There's 2 countries where you don't have indexation, which is Italy, where the lowest price is, and there's Germany. And I mean, when I look at it, look at Austria. You have an incumbent which is basically doing nothing, and you have one of the highest rate of a capex, and you have a relatively stable ARPU on mobile, which is their substitution product. And we sit here in 5 years, if you're still alive, and say, hey, there's nothing happened in Austria. There will nothing happen. And Italy is now a big move from KKR, which bought Fiber Corp completely, and there is an Vodafone sold to Swisscom, so there will be a stabilization. So there will be more fierce competition, but at one day they need to basically have a stabilization in the market. There will be indexation, and there will be not only price competition. Germany, I mean, like all our governments in the last, I think in my time, I had, 4 or 5 Minister of Transportation, and they created a monster of subsidies which were actually in competition. They were in competition to private investments. And now they are sitting there and say, and I think the big issue is the pressure is on, and they have to do that, because what we are building is not sand in the desert. We need that for the digitalization of Europe. And there is an external pressure, so there will be something happen. And my hope, and I don't think this is a lot of hope, the new German government is pumping money now, but I would say 50% goes to the consultants and the gigabit offices, and they will explain how difficult it is. And then you sit in Germany and basically talk to a little guy in a little town, and he's saying, trenching is not allowed here because I don't like it. And if we don't really change that, we will do again and again the same discussions. And I think what is hopeful for me is the digitalization. There's so much pressure on Europe on many fronts that also the bureaucratic hurdle will be basically a bit lower, because otherwise nothing will happen.
Yeah, I mean, that's of course an interesting question, but maybe, I'm not sure if the EU direction can help with the German bureaucratic hurdle, but yeah. Yeah, but there is a lot, of course, happening on the regulation side, and maybe Elisabetta, you want to briefly comment on the dynamic.
Thank you. So, I think there are two perspectives, and in any case, a regulatory assessment has to be performed on a case-by-case basis in case of any consolidation. So, from one side, we have a regulatory trend that is going toward a more supportive framework to consolidation and to push for market repair. So also with after the Enrico Letta and Mario Draghi report on the European competitiveness and the last European competitiveness compass, there is a evolution to create a facilitate the consolidation a transaction in Europe in the sector. On the other way, an assessment has to be performed on a case-by-case basis in consideration of how big are the operators that are going to be consolidated and which technologies you are consolidating. Because at the end of the story, the European Commission has to assess the balance between the need to consolidate and the need to keep the infrastructural competition that today has been assessed on a geographical area basis, but the need of one or more infrastructure available will drive their decision in assessing and approve consolidation.
So that's, I mean, we would probably see it more as an inhibitor for now, but so you're saying it has to become more local and, yeah, I mean, tailored to the local markets. I mean, your comment before was you're seeing it as, in the end, also in the UK, supportive.
Yeah, very supportive, yeah. I mean, I think if you've got a pro-competition regulatory strategy, which we definitely have in the UK, again, good timing. We just had the consultation document published by our regulator last week, which will set the regulatory framework till 31. And actually, they've made comment about the next 5 years, so to 2036. That is exactly what we need. We need long-term certainty. We moved the regulator in the UK from doing 3-year cycles to doing 5-year cycles now, which is very helpful, and making comments on 10-year horizon. So I think, you know, we were very, very pleased, and I think that is important. If you've got long-term certainty and you've got, if it's not the incumbent doing consolidation, you've got a pro-competitive environment, that's perfect. That's all we need.
Yeah. Thank you. Thank you very much to the panelists. The clock is ticking down, and maybe Gabriel for a short closing statement.
Yep, happy to do so. So it was a very animated discussion, I would say. We could go on for hours. Because actually it was planned to also have the time to ask questions and so forth, but I would suggest that we take this at the VIP lounge. The panelists will be there as well, so we can have an interactive session. Just to close this and give a frame around it, I think what is clear and what we heard is there's a huge opportunity, in particular in a fragmented market, as well as with companies that are simply financially not in a state that they can sustain themselves and run the business. So therefore, consolidation will happen, and to put it in the words of Mark, it can even happen quicker than we expect. And also, to phrase it in the words of Uwe, it is important that you have a game plan for it. You need to have a playbook. So you can run it as a business model. You need to make sure that it is ready to be scalable. It is not like in mathematics where minus and minus is plus. But you need to have a stable, a good running company that you can actually drive consolidation. And one important element for this is obviously also the wholesale element, because your network, you need to make sure that it's obviously utilized, that it's full, and therefore you need to have strong ISPs who are driving this. And that is, I think, a foundation for driving consolidation and making sure that this can actually happen and will happen. And with that said, thank you very much for your participation. Lunch is in the VIP area, and we're looking forward to some discussions with you. Thank you.